He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
And we are back for episode, I don't know what the fuck the number is. I have no fucking clue.
5,000.
But my editors will put the number on the episode.
Oh, we're caving to the demands, are we?
Yeah, no, it's on. I looked for the last two. The numbers are on. We're good. Okay. All right. I'm back with Sasha Fabry, Ace, mortgage sales guy, Ron Butler, a rambling fuck. Okay, I did get that the other day on a comment. You just ramble, you fat fuck. Okay, that's it. Anyway, there's lots of comments, dude. You don't see the comments.
If people aren't smart enough to see the info, it's on them.
I'll tell you what, it's okay. Now, I just want to get this out of the way. It's important. After the last sort of 10 days.
Oh, my God.
All I can say is this. This is the first 3 months of the Trump presidency.
We're fucked.
Where the fuck will we be in 3 years?
Honest to God. It's a shit show. It's been a fucking
Although,
shit show.
as I promised, I did promise.
Entertainment.
I did promise this. Yes, it's entertaining. Like, seriously, I've seen more comedians do Trump in the last 3 months than, anyway, it's great. That was the only positive about COVID is comedians ripping on Trump. Anyway, they had a lot of people to rip on. Like, they ripped the fuck out of Justin too, which is great. Isn't it amazing how we've completely forgotten Justin ever existed? Justin Trudeau is now like first of all, within the Liberal Party, that is the name you can never speak.
No.
Okay, you can never use that word. The phrase Justin Trudeau is banned. If you can't say it, if you're a Liberal, you can't even think it. They don't even want you to think it.
Just okay? Canadian Tire and their rewards points is who's focused
That's
on
it,
now.
yeah. So what will it be like in 3 years? Like, I don't know, but I did promise this and it came true. When people were really obsessed with Trump about the 51st state and the Governor Trudeau and attacking our sovereignty, and this is what I knew and I promised everyone. I promised it out loud on TikTok, IG, here in the pod. I guaranteed it. I guaranteed that soon, there will be a new shiny object for Trump to obsess about. And they'll forget about the 51st state bullshit. And lo and behold, thank you, China. Thank you, China. Okay, it's now China 7 days a week, 24 hours a day.
How high will they go?
Fight.
Jesus Christ. But you know what? They've still got tariffs on us, though. He forgot about the state stuff, but we're still facing that fucking tariffs.
Oh, the tariffs are the tariffs. I mean, it's fuckery. But here's something that I'm going to do this at another. I'm going to do this a couple of TikToks and Instagram reels about this. Like we everybody in Canada now, in all Canadian media, all Canadian mainstream media, they talk about 24/7 is steel, aluminum, a little bit of potash, but really steel, aluminum automobile, right? Steel, aluminum auto. Yep. And that's all they talk about for the tariffs. Whereas, and those are 25% tariffs.
Yep.
And on the vehicle parts, maybe like it's a range between like 10 and 20.
Depending on cruise,
all that stuff, yeah. The fucking canola and seafood tariffs are 100% from China. And China buys a ton of canola.
Soybeans too, yeah.
No, there's no tariffs on soybeans. But there's tariffs on canola. Okay. And the crazy part is and seafood, like the Chinese bought half the lobsters that we ever got out of the Maritimes. I'm supposed to say Atlantic. Those people are fucked up.
Yeah.
You don't hear a peep about it. You never hear about it in mainstream media. It's just steel, aluminum, and cars, steel, aluminum cars, car parts, steel, aluminum. Nobody ever stops and says, I guess the guys who are growing canola are fucked. Okay, like, I mean...
You should worry about, yeah.
It's real, but it just is the perfect indication of how mainstream media in Canada does not give fuck one about ordinary people feeding us in the Atlantic provinces and Saskatchewan and Alberta. They don't give a fuck.
Very Ontario and Quebec focused.
That's all it is. That's all you get. So, because it's serious, 100%, double is serious. All right, so we're going to spend the whole episode, this whole entire podcast, we're going to talk about mortgage rates.
Yep.
And the various lies told about mortgage rates and the incredible gyration in mortgage rates.
The fuckery of the last 2 weeks.
The fuckery of 10 days, okay? It's an interesting story if you're in the mortgage business, and I hope it's an interesting story for anybody who's interested in mortgages. So let's get going. So I got to start with little lessons first. Little lesson is that variable rate, which has become popular, very popular at the beginning of the year, kind of slowed down when the fixed rates went below 4.
Yep.
But it's still a popular category. Variable rate, that pricing is entirely tied to the Bank of Canada.
Correct.
That's it. And it's a discount. You're receiving a discount. Either you're getting 75 basis points off.
Yep.
The Bank of Canada Prime, you're getting 50 basis points. You're getting 100 basis points. You're getting 125 basis points. Not much of that around.
Depends when you got it. Yeah, you could be lucky.
Again, that rate fluctuates and is based and is completely a whole cloth. It is the Bank of Canada. Now, many times the fixed rates, which are 2-year fixed, 3-year fixed, 4-year fixed, 5-year fixed, there is a 10-year fixed. Nobody takes it. The rate's too high. Well, nobody takes it. The rate's too high. You know, there were a couple of people caught lucky on that, right?
Oh, yeah.
I know people who got a 2.
Oh, you mean on a 10-year?
A 10-year. Like back in 22. Let me hold on. Back in 2021, Mortgage Christmas. Okay. You could get a 2.49 10-year rate.
Hey, I guess. Yeah.
Yeah.
Fair enough.
So, you know, that was, but nobody took it. Like, folks, if you ever wonder about why doesn't Canada have 25 and 30-year mortgages like the U.S., like in other words, the entire term is covered. You have, when you get a mortgage, it's good from when you get it till you pay it off 30 years later, 25 years later. Okay. There's no renewals. It's just one mortgage till you're done. And you can prepay, you can speed it up, but that's it. Why don't we sell them here? Okay. Because they're more expensive. Like if you want a mortgage today in the United States, the best rate's about 709. Think about that. Well, that sounds good because it's for 30 years. Fuck off, stupid. No, it's not good. I mean, nobody wants a 709 mortgage, for the love of Christ. I mean, that's a lot of interest, all right?
Well, it's based off of the bank's risk, right? And so...
No, it's based off securitization. Sorry.
Well, sure. But, I mean, when...
By the way, in the States, it's not banks.
Yeah.
Here it's banks, not Canada, in the U.S.
When we're thinking about fixed or variable or whatever, right, the banks are assessing the risk on their money too, right? So over a 5-year period, if the bank is offering a fixed rate, the reason we're looking at bond yields is because that's their projection of what's going to happen in the economy in the next 5 years, right? Whereas the variable rates, based off of the Bank of Canada overnight lending rate, right, that's based off of what's going on now. It's variable, so, you know.
Yeah, the bottom line is that with variable, the bank is only the risk is on you. So that's another reason why the rate can be a little bit better. It should be better. It should always be better. If the risk is on you for future rate increase, you the borrower, then I guess it should be the best deal.
But who knows what's happening in 30 years, right? So a little bit of buffer.
To finish up, what is the basis? To finish off. If we were offering a 30-year mortgage today,
okay,
for and let's say it's cheaper than the States. Let's say it's instead of 709 or 699, let's just say it's 6%. We're offering a 6% 10-year mortgage.
Okay.
Sorry, 6% 30-year mortgage. Here you go.
Yep.
Here's 6%, take it, you're good for 30 years. Do you know what percentage of the mortgage market would be that product?
Very, very small.
1%.
Very small.
Okay, if we're lucky.
Yeah.
1%. So folks, and by the way, the 10-year, you can get a 10-year right now. You can get a 10-year right now. I think it's like 509 or whatever. I don't know what it is. 519. But look, you can get a 10-year. Nobody takes it. No one takes it. The ultimate truth in Canada is
People break mortgages.
people want the lowest rate.
Yeah.
And, people are smart enough to realize the 1 year rate's too volatile. Who the fuck 1 year? Fuck. I hated this experience of getting the 5 year. I'm not going to do it every year for 5 years. No. So yeah, that's the reality. The reality is that we're never going to sell a ton of 10 year, 25 year, 15 year, any of that stuff. We're not going to sell it. It's more expensive.
Yeah.
And in Canada, the fucking house prices are so high that if you say, well, your payment's going to go up by X, they say, or you can qualify. You only qualify for less house.
Yeah.
Everybody says no. Fuck that. What's the best deal? Give me a better deal.
But the thing is, most people break their mortgages within a 5 year period, right? And so
no,
you don't think so?
It's a slim. That's a misunderstanding. There's you know the guy who was the biggest peddler of that.
Okay.
There was a guy who is like actually secretly he's an alien from Alpha Centauri. He's out of Vancouver. Okay. He's bald as a cue ball. He's about 8 feet tall.
All right.
And no offense to bald people.
I was going to say, okay. You're wrong.
No offense to bald people. But he's actually an alien from Alpha Centauri. Every night, when he goes home to bed, he goes home and he presses a button and secures his entire house so no one can get in. And then when he's getting ready for bed, he unzips his skin suit.
Okay.
And he's really a lizard person underneath. And he has baby cadavers in the cooler.
Love it.
And he chows down on a baby.
Fantastic.
Okay, that's what he does.
Did this guy really piss you off? Like, what's going on here?
No, I'm telling the truth.
Oh, okay. All right. Jesus Christ.
Anyway, that guy always used to say that, by the way, he would sell 2 year fixed at one point in his career. Yeah. He doesn't sell mortgages anymore. He just, I don't know what he does.
I wonder why he sells 2 year fixed.
But in the day, he was telling everybody, he always said the same thing. Well, it's easy to understand. It's for the flexibility to have more possibilities. And by the way, 67% of all mortgages break before the 5th year. So you want that flexibility. By the way, that was a lie. There's fundamentally a complete lie.
So where's that stat come from? Is it just him?
He pulled it out of his alien ass. Okay, that's all it is. That's all that happened. He just pulled it out of his alien ass because it supports his nonsense about take a 2 year or take a variable. It was always take a 2 year, take a variable. Variable has the lowest penalty, take a variable. Okay, so, but it's nonsense. Okay, here's what I did. I got so tired of the fuckery. Okay, that I offered a bounty. I said, if anyone can get a letter, an official letter on the letterhead of the lender with the signature of an executive at the vice presidential level that said that 65% of all their 5 year fixed mortgages broke and paid a penalty before the end of 5 years, whoever could bring me that letter, I will hand them $10,000 cash money, like folding money, no tax. Nice. Okay. I made that offer multiple times for almost a year. Fuck all, nobody showed up, okay? Because it doesn't exist. I've asked lender bosses. I've asked the bosses and lenders. Is that number true? They all say the same thing. Fuck no, that's not true. In certain situations, it'll go up maybe around 50% under very specific circumstances. Yeah. Like for instance, like we're experiencing today.
If rates are
like
falling.
If you bought, if you ended up taking a 519 rate, and all of a sudden it's 399, you're going to investigate a break.
Of course. Okay. But the break on a 10-year would be massive. The penalty would be massive.
Well, no, it's only massive in the first 5 years. Then it's only 3 months interest after that. That's the legislation how it works. Yeah. But still, it is fucking massive, okay, in the first 5 years. Look, the bottom line is, most people keep their mortgages. See, because here's why. Most people get their mortgages from banks. Okay. So if you want to do something with your mortgage, if you decide you need something done and you want to renovate your basement, you want to do this, you want to do that, what can a bank do?
They can give you lines of credit.
They can give you
blend and extend.
They can give you even a fixed mortgage piece. Yeah. Okay. They could, like, apparently National Bank, you could have 99 pieces of mortgage in your mortgage if you want. You could have this incredible flexibility. So so why the fuck would anybody pay a break penalty? Okay. Except, and this is what's going on today, except if the math of paying the break
makes more sense.
Like if you have 2 years left on your mortgage, your penalty's $8,000. Yeah. Your savings if interest is 13 grand, $5,000 ahead, sign me up. That's it. Once you're dead sure about the math, that's the only time it makes sense.
So this guy was recommending 2 years because
because something's going to change in your life, you're going to have to break your mortgage.
Yeah.
Okay.
Yeah. Return
But
clients.
really, what it was really designed to do is create 3 commissions in 6 years instead of 1 commission in 5 years.
Yeah.
That's the only fucking thing it was designed to do.
Yeah.
That's it. Okay. So that's nonsense. Okay. Look, we're going to dive into this a bit more in a minute, but let's get back to the incredible rate action we've seen in the last 10 days. Okay. So April 4th.
Yep.
Oh, I forgot to add an important part. Remember, we said variable rate, Bank of Canada. That's what drives that rate. That's what creates that rate. The Bank of Canada rate decisions create that rate. We got one coming up tomorrow.
Yep.
Tomorrow, there's a Bank of Canada, and we'll get into what we think about that in a minute.
Sure.
But what drives fixed rates are bond yields.
Yep.
The government of Canada issues bonds, and it issues a shit ton because we run huge fucking deficits in this country, right?
Yep.
Like
Give us money.
67 billion last year. God knows how much.
Yeah.
Every single candidate's promised a jillion tax cuts and a million programs, and who the fuck knows?
I think this is a really important conversation because, I mean, let alone the general public, even I think most mortgage professionals may not really understand the nuance of how this all works and how it affects everything. So this is good stuff.
Yeah. So every lender, bank, doesn't matter who it is, bond yields are their guide to how they create fixed rates. That has to be.
Yep.
Because the way mortgages work in Canada, because the default rate is so incredibly low, even under some pressure now, it's only up to 22 basis points.
People protect their houses in Canada.
That's the 90-day default rate. Okay.
Yep.
A lot of the mortgages are insured in Canada, which means that the government promises to look after that claim.
Yep.
Ultimately, here's the truth. Mortgages have been a very safe bet in Canada for basically ever. So, what a bank does, and various other companies like First National, MCAP, CMLS, RFA, these companies take. I'm sorry if I missed anybody. Don't. I don't want any lender bosses.
One of our monolines.
I don't want any lender bosses sending me an email. Hey, you missed me. I'm a real lender too. Okay, we're just trying to give information to people. Okay, so what happens is that you have a rate created by using the 5-year. Let's take a 5-year fixed uses the government bond yield, 5-year bond yield.
Yep.
Sold by the Bank of Canada. Well, it's not sold by Canada. Sold by the Canadian Treasury. Yeah, it really is sold. Like it's traded. Like you can't. By the way, folks, you can't go out and buy it. Okay, like you got to be this massive financial institution to engage in this.
Yep.
So these bond yields form the guideline of what a mortgage rate should be, because what you do is you just take the yield, you add a premium because it's not a bond, it's not a government bond. Okay, it's something a little riskier. You add a premium, you add a gross margin for the bank to make money, you add a gross margin for the administration of the mortgage, because mortgages need actual administration. If you miss a payment, somebody has to call you and make sure. If you want to change your bank, somebody's going to do that. I mean, there's a cost for administration. It's not free.
Yeah.
Okay.
So very, very, very simply, and this is very dumbed down, but here's the example, right? You buy a bond for $1,000. It promises to give you a 5% return annually. Your bond yield 5%, right?
No, not at all.
Oh, shit.
It's about what you sell the bond for that creates the yield.
Well, sure, exactly, right.
So, but bond prices go up and down.
But you divide the yield by the price, right? And so if the bond price goes down, that means that the yield is going up to accommodate for that.
Correct.
Yeah.
Okay, good. But nobody.
Not fired.
Our customers do not need to hear that. Okay. Our audience doesn't need to hear that.
Okay.
Well, it's just easier because you can look up bond yields, right?
Yeah.
If you want to Google bond yields, you will find 6 different sources of them. Look up 5-year Canada bonds. You will see it, and you can see, okay, that's the rate today. But so what do we add to it? In the case of insured mortgages, we might add only 90 basis points, 80 basis points to it, and we get a rate. Because it's fully insured. It's guaranteed by the government, or 90% guaranteed at least. So in other cases, we might have to, because not insured, we might have to add 110, 120, 130, whatever the case is, the bank's margin is comfortable with making. So at the end of the day, that's the guideline that creates. So folks, when everybody says to us, as mortgage brokers or as bankers like this. Everybody, all the time we get this comment. You've heard it 1,000 times.
Probably more.
Okay, I want that 5-year fixed. I'm really thinking hard about the 5-year fixed. I'm going to wait till after the 16th of April, which is the Bank of Canada announcement, to see if it goes down.
Yeah.
Not just no. Fuck no. No, it's
Stupid.
no, fuck no.
Yeah.
Okay, that's not how it works.
And the advisors are wrong for two different reasons there. One, if you're getting a variable rate, which is, again, the only thing that is affected by the Bank of Canada announcements, right? If you're getting that variable rate, who knows what the discounts are going to be after that announcement? No one knows. They could be the same.
They'll probably
who knows?
They'll probably be about the same. They won't change radically.
But you may as well lock in, and then if it gets better, great. If it doesn't, you're locked in, right?
Let's just stick with fixed versus variable. So the key thing to understand is that there is no relationship
doesn't have anything to do with
between the Bank of Canada and fixed mortgage rates. All right, now we come to the fuckery. Okay, so on April the 4th.
Liberation Day.
No.
When was that?
I don't know. Who cares? I don't care.
Second. It was April 2nd.
Why would you name a day that all the people in your country are going to pay more for something, okay, or for many things? Why would you call that Liberation Day?
To trick people.
Well, it's theater. Okay, it's theater. You could have called it whatever the fuck you wanted to, but you call it Liberation Day.
So what happened on the 4th?
Canadian 5-year bond yields on the 4th were 2.42. 2.42, which was like a multi-year low. That's like 2.8-year low.
I think it even got to 2.36 on
No,
Friday.
I looked it up. Like I actually look it up for this fucking podcast, Sasha. Jesus Christ. Okay, so 2.42. Rates were falling, as we all know. Rates were down. You could get 2 days ago, Butler Mortgage was offering a 5-year fixed mortgage for high ratio, that's less than 20% down, purchases at 3.64. Okay. You had to be a certain size of mortgage, had to be a big mortgage, a few other details, but there are people who got that rate, correct?
Yeah.
Okay. We advertised it. They got it. If their mortgage was over what? 700? What was it?
There's a lot of different high ratio, or if it's over 700, people can. Yeah, they were still getting 3.6.
They had to have great credit scores, but otherwise they could get 369.
Yeah.
Okay. And there were banks offering very low, totally conventional rates. Nothing to do, a bank offering a rate, nothing to do with high ratio, nothing to do with CMHC, 379, 384, 389. That was all available when that moment in time, when that bond yield hit, 5-year bond yield hit 2.42. All those kind of 5-year fixed rates were available.
Yeah.
The rate before I came into the room today was 2.88.
Yep.
Okay. Obviously, that's a 45 basis point jump in literally 7 days.
Well, I think it was even 3 days later. I think by
let's work with today.
But had it ever? I don't know. You pay attention to this longer than I. Has it ever risen that quickly? Or that much that quickly, even in COVID, even in 2008. Only COVID. So when people are, when you were telling people 2 weeks ago, 3 weeks ago, lock in, consider locking in, it's absolute correct advice.
Yeah, 2 weeks ago. Yeah, about 2 weeks ago.
If you're in a variable, call your bank, figure it out, because the fixed rates they're going up. Fixed rates?
Well, they are. They're up. They're up already. Okay, so those rates that I just talked about, they're all, Then, by the way, folks, this stuff trickles in.
Yeah.
Like it comes. One bank raises one day, one lender raises the next day, 3 lenders raise the following day. Like certainly by the end of this week.
Yeah.
364, 369, 374, all that stuff gone.
Yeah.
It's gone. Hey, listen carefully. It may come back. We don't know. We do not know. Okay. So what caused it? Everybody says, well, Ron, what the fuck caused it? I mean, not just tariffs, right? I mean, okay. So I'll explain. What happens, the reason for the incredible drop was that the Trump tariffs, remember when he came out with the 2 cardboard tablets from Moses, from Mount Sinai, he came out with those 2 cardboard pieces of shit.
Yep.
And said, oh, here, this is all beautiful. He says that a lot, right? This is beautiful. It's beautiful. So that day, the stock market fucking blew the fuck up, crashed. And when money comes out of equities, it normally has to go somewhere. So it often goes to bonds. It can go to cash. It can go to short term, but sometimes it goes to bonds. And if all of a sudden bonds are selling like crazy, then the yield drops. Okay. So what happened next? What happened in the U.S. is U.S. Treasuries, which is their version of a Canada bond, Bank of Canada bond, sorry, a Canadian Treasury bond. We just call them U.S. Treasuries. They took a jump of, over the same time frame, 58 basis points.
Yeah.
So they went up nearly 60. We went up 45. They went up 60.
Yeah.
Why? It's like this.
Massive reaction.
Massive reaction to the idea that this trade war is definitely going to cause inflation.
Yeah.
And it also questions the whole like when we talk about the stock market, it's about 1/10 the size of the debt market.
Yep.
Like the debt market is the biggest market on earth. Okay, is bonds of some type, government bonds of some kind or another, mortgages, you name it. It's the biggest market on earth. So what ends up happening is if people starting to, if people start to get nervous, traders, institutions, pension funds, sovereign wealth funds, you name it, are starting to think, what the fuck? Maybe we should be more in cash, or maybe I don't know. And the other big problem too is that the U.S. currency, which had been so strong for so long, started to drop in relation to other countries rose. So all of a sudden it's like, should we get out of the U.S.?
Yeah.
Period. Okay.
But yeah, I mean, correct me if I'm wrong. Essentially, it goes like this. If inflation is going to be higher in the future, that means your bond today is going to be worth less in the future. Therefore, yield goes up. Price
100%.
goes down,
Yeah.
yield goes up.
Right?
So
what bond yields also are, there are many things. Like, I'm not a bond trader, for fuck's sakes. I mean, I wouldn't be
maybe we
sitting-
should be.
No. They retire those fuckers at like 55. Like, you get to be the vice president for a while, but then there's nobody on a trading, virtually no one on a trading desk who's as old and fat as me, that's for sure. So I'm not a trader. I don't pretend to be. But the general theory is that the expectation of inflation is a critical factor in what drives bond yields.
Of course.
Okay. So, and trade wars bring inflation. Like if China's 125% tariff on U.S. goods, and the U.S. is 145% on China goods, that's fuckery. I mean, that's going to create higher prices somewhere along the line. So we just have to accept that. Now, people like to say, or Trump likes to say, "Oh no, I'm waiting for a call. I'm waiting for a call from G. She's going to call. He's going to be a call. I make a deal. I know him very, very well. We have a great relationship." I don't know if he has a great relationship with the Chinese president. I'm not sure.
No, I don't think so.
Well, he thinks so. Anyway, that's fine.
Let's not get into how much debt
We'll
the
see.
U.S.
We're gonna, our heads are going to explode if we start talking about that. So, so that's the story of the fixed rate increases. That's why fixed rates are higher this week than they were a week ago. May go higher. It's so hard to predict. The volatility is so tough. I did say to people, look, for 16 months, I said take variable, and eventually a moment in time would come when we can get a 3.79, 3.69, 3-something-9 rate.
Yep.
And it came. And I said, you don't have to. Like, let's face it, if you're selling your house within a specific moment in time, like a year from now, stay variable. Who cares? That's fine. Stay variable, low penalty.
You'll have the lowest
more
penalties
flexibility, all good. Okay. Well, one last important thing to say about variable. Tomorrow, the Bank of Canada, it's 50-50. 50-50 they cut, 50%
That's what
chance they stay. 50-50.
Everyone's recommendation.
50-50 for a 25 basis point cut. But here's what I will tell you. Whatever the fuck they do tomorrow, in June and July, there will be cuts. Because, as I've said endlessly, the Canadian economy is circling the bowl. The Canadian economy by July, the meeting in July, the July 30th announcement, the Canadian economy will be long past the bowl, through the S-band, down through the pipe of your yard, and into the actual sewer system. That's where it'll be, on its way to the lake, on its way to the ocean, okay? On its way to the treatment plant, okay? I won't give anybody a lesson on how water treatment at poop works, but I mean, that's where it's headed. Okay.
It's like a $4 billion North Van.
Yeah. The infinite expensive North Van water treatment plant. So that's the reality. You can't, and people don't understand this. Like about two and a half years ago, the Bank of Canada took on the same kind of dual mandate that the U.S. Fed has, okay, which is not just inflation, but also to maintain employment, maintain a jobless rate at a reasonable point. So, because there's nothing but fucking trouble going on.
One day we'll all work for the CRA, Ron. Everyone.
Fuck me, yeah. The CRA will have 2 million employees. Anyway, bottom line is this. Bank of Canada will lower the rate. There was a great inflation news out of the U.S. Just last week. Okay, inflation dropped, and people were thinking, no, it's going to stay the same, but it dropped. So, encouraging to the U.S. to drop. I mean, the odds of the U.S. dropping 75 basis points by the end of this year went from 0 to 60 in the matter of 2 weeks. Okay, when the Trump madhouse started. So we have to appreciate that. We have to appreciate that. In all likelihood, Bank of Canada will drop. You will have, and if things really go fucked up, the Bank of Canada could drop 125 basis points. You don't know if it's like super fucked up. If it's like 12% unemployment, you'd be surprised what they can do. They could do a lot. Now, ultimately, will inflation return?
Yes.
There's a question. Okay, so. And this is the most important thing. I say it like endlessly because it's so important to everybody who has a variable rate. When the Bank of Canada finally announces their first rate increase, you are fucked on escaping to a fixed rate.
It's done.
It's gone. It's all gone.
It's done by then. Yeah.
The fixed rate has long gone. The fixed rate, it would not surprise me when the first increase of the Bank of Canada is announced, fixed rates will be like 5.6.
Yeah.
Already. They'll be all the way up from 3 point whatever.
So traditionally when people have been calling in the last couple of weeks, that's essentially what I'm telling them, which is, look, variable is very, very, very likely to continue to drop throughout the year.
Correct.
Either at this most recent one or in the later ones, right? The question you have to ask yourself, and we've harped on this for a couple of podcasts now, but really this is what people are tuning in for, advice on the mortgages, right? And so it's, what do you do? Are you in variable for the long haul? Or are you switching into a fixed at some point? And if you're in for the long haul, screw it. Fine. Okay. It's very likely inflation in the next 5 years will catch up with us eventually, and the prices will go back up again. But if your goal is to go into a fixed rate, the question is when? Do you do it now? Which 2 weeks ago, the answer was now, right now, do it now. Now, right? What's going to happen in the next couple of months is very difficult to gauge.
Well, let me address that very valid point you made. Some people are ride and die. Variable. That's it. We're forever variable. Life or variable. And when you talk to those people, many of them will tell you that, for the last 30 years, everybody who took on variable on average, they did better than people who took fixed. Which was correct for 30 years, but could be totally fucking wrong now. Okay?
2008,
now,
COVID,
Jesus
this bullshit.
Christ. Come on now. Sure. Seriously, I got a funny feeling that if I look back on, next year, if I look on anybody who took a 5-year fixed in 2021, they all did much fucking better than the variable people.
Of course
Every fucking one of them.
Of course.
All right, so yes, I want to say to those people, yes, you've read it, you've been a lifer on variable, but you gotta think about this. Those days are gone. The zero interest rate program is gone. Okay, that's gone. It's not coming back. Central banks are very, very, very attuned to this now, that it was a mistake. Leaving rates super low in the world economy for 12 years was a mistake.
They acted too late and they kept it too late.
So, what to do? To your point, you watch it closely. That's all I ask is vigilance. Be vigilant. People are in variable. Be vigilant. Okay.
Well, and we're starting to see cracks in our systems here in Canada. Stellantis has gone on pause. The GM plant in my town has taken a couple days off because they're having trouble getting certain parts, right? So cracks are
I got news for you. The Stellantis plant in Windsor that supposedly temporarily closed.
Yeah.
Stellantis, folks, is Jeep and Chrysler. Okay. So this Stellantis plant in Brampton has been closed for almost a year. It's coming back, quote unquote, soon.
Sure. Everything in Canada is soon.
The huge Ford plant in Oakville is been closed for over a year. Retooling for electric vehicles, except we've changed our mind. We don't want to do electric anymore. Close all those fucking battery plants you opened, okay, or trying to open or building, $50 billion pissed away. Yeah, we'll let you know when we're back in Oakville. So folks, like, the only people that are going full bore is Toyota and Honda, and God bless them. And but maybe not. We'll see. Parts, you name it, lots of issues.
But that goes back to the thing that we've been saying.
Tariffs.
Yeah,
right?
tariffs. But for a while now, it's, do you have job security? Do you have a recession-proof job, right? Do you have the ability to weather any kind of storm?
Okay, so let me just finish off this part of the rate topic with this one important concept. When you're at this time of supreme volatility, which we haven't seen for decades, what I got to tell you is 3-year fixed is not really rational. Again, unless you have a super specific thing. I'm going to be 66 in 3 years. We've agreed we're going to retire, move here, move there, or half year here, half year there.
Yeah.
Maybe not half year in the States now. Maybe you got to go to Mexico. I don't know. But if you're ultra specific on 3 year, it makes sense. If you have totally timed reasons. But here's the mistake. We recommended 3 year in 2023 because we were sure the rates, which had shot up, were going to come down eventually. So don't go 5 year. We've reached the point we have no fucking clue where rates are going to go. Okay. Could be good, could be awful. So when you're acting for pure defense, when you're saying to yourself, okay, I could either go offense, I'll take variable and hope for this weird thing, which is a deep recession with no inflation. Okay. Which is possible. That's possible.
Oh yeah.
And then, yeah, you could have a good result from variable. But if you don't want to make that big bet, what you have to do is take a 5 year. Don't take a 3 year. Don't ask about 3 year rates. Again, unless it's super specific. You got a real timeline. Take the best priced protection, defense against rate volatility.
Yep.
Take a 5 year.
Correct.
Okay, but Ron, I thought 67% of people broke before the end of 5 years. No, fucking 8-foot tall alien, wrong, all wrong. Okay, no, take a 5 year.
It all circles back. People think I talk randomly about things.
It's a weave. It's a weave. I weave it like guys. Trump. I weave it. Okay. All right. Let's talk about bank and broker lies.
Let's do it.
Bank and broker lies. Okay. I'll start with the bank, which banks are actually not as big liars as some brokers are. Okay. But essentially what bankers are trained to tell everybody about brokers and broker mortgage products and broker mortgage rates is they're trained to say, oh, you better watch out.
They'll charge a fee.
You better be very careful. There's going to be lots of fees. And the broker will charge a fee. And then you'll have to pay the lawyer because the broker can't cover the lawyer. And then you'll have to pay for the appraisal because the broker never covers the appraisal. So you're going to pay a lot of things to go with the broker. But the bank covers it all. Okay. Lie. All lies. Like Sasha. What percentage of people you're talking to about mortgages are not going to get, not on a purchase, but on any kind of transfer, any kind of refinance? Do the majority of everybody you talk to get their legal fees covered, get their appraisal covered, and there's never a brokerage fee? Like,
I think there's maybe 1%, maybe. The majority of deals that we do here, we are doing where the fees are covered either by us or the bank. And unless you're going to a very specific lender who might not cover the legals, or a very specific situation where you don't qualify for them.
And this is the only fit you have.
And this is it, right? And so, that's it. It's very, very few. And sometimes those people are mad, but it's either that or you don't get a mortgage.
The simple summary is that the banker's story of you're going to pay a shit ton of fees is not just a lie, but a pathetic lie. It's just not true.
Easily cut down.
Also, another strange lie I'm hearing now is, because this is a lie that doesn't even make sense. The broker only sells mortgages where you're locked in for the whole 5 years. Like you can't break. There's no break. You're not allowed. You can't get a line of credit. You can't get a break. Okay, so again, total fucking lie.
Yeah.
Okay, I mean, have you sold a bona fide sales clause or a no break mortgage in the last year?
Very few. Like they exist, but very few. And those you have to tell the client up front. You tell the
client knows about
Look,
it. Bottom up, what? It's like 2%.
Just very few.
It's tiny.
Very few.
Like the truth is, the majority of mortgages you're doing for anything to do with a refi is a refinance of a mortgage is with a bank.
Yeah.
Right? It's with a bank. Okay.
But it's always specific. Like our job is to find out situation specific. And if you talk to someone where it's like, hey, you know what? I'm buying my home. I'm staying here for 20 years. I'm never going to break this thing. I just want the best rate. Okay. Well, then maybe consider this product. But you talk about it with them so they understand, right?
Okay, so that's the banker lie of your guaranteed extra fees, extra costs, pay for your legals, pay for your appraisal, pay for everything. We're a better deal. Okay,
yeah. I mean, we cover the appraisal on most deals here. Most of the lenders we work with cover the legal fees.
That's just the way it works.
Yeah.
So let's get the banker lies out of the way. As I said, the bankers actually don't even lie as much as the brokers do. Okay, so now I'll give you the number one broker lie, because you will see this on, I'd say, 95% on all broker social media.
God, there's so
every
many.
TikTok, every Instagram, every reel, every story.
I'm so curious.
It's all about the same thing.
There's so many.
It all starts exactly the same way. And this is how it starts. Hey, folks. Rate is not the most important thing. Some brokers will tell you rate is very important.
You date the
But
rate.
it's not the rate. It's not the rate. It's service, and it's the kind of mortgage. That's the important thing. I know some people come and say to me, what's your rate? And I have to explain to them, rate is not important. Now, that might be a very, very nice lady. It's a lady I just saw.
We got to get the puppets out when you do these voices again.
Literally last night. Last night I saw this nice woman. I'm sure she's a nice woman, but the level of bullshit was off the fucking charts. Okay, like off the charts. As a matter of fact, 1 week ago, I got so mad at one of them, I actually put in the replies. I said, "Are you sure rate's not important because you want to make more commission? Are you sure?" Okay, because folks, this is what it's all about. Two things brokers want. They want you off the subject of rate for two reasons. They want to sell you a full price mortgage, a full rate mortgage. They don't want to discount a penny. So they make the most commission. Okay. That's number one. And number two, they have their pet lenders. You know, like we're Butler Mortgage. Correct. And there's lots of big mortgage brokers. They're bigger mortgage brokers than us. Nesto's bigger than us. True North is bigger than us. Rate Hub's bigger than us. And they're also completely obsessed with giving great rates. Mostly we're better. Correct. By a little bit, by a tiny bit, by like 5 bips or something.
Those are the ones I'm fighting with, but yeah.
We win our share. Okay, but at the end of the day, the average run-of-the-mill broker working from their basement
can't afford.
Can't even think about it. Yeah. Like that's just not their business model.
The average broker does what? Maybe 10 deals in a year, if they're lucky, right?
The actual number is 3.
Yeah, exactly.
Because it's like real estate. Same as realtors. There's a ton of them do 0.
So if you are doing 3 deals in a year, can you afford to make no money off of that deal, but get volume bonus? No. And that's how we operate. Yeah. I like to tell people that we're sort of like the Costco of mortgage brokerages. We're just dealing in such a large volume that we can afford.
But hold on a second. On your Costco thing?
Yeah.
I don't want any fucker coming here asking for $1.50 hot dog. Okay, I do not want that. Do not come here. There's no hot dogs here.
So we're doing some renovations in the office right now. That actually sounds like a pretty fun idea. Can we get a hot dog machine up there?
Jesus Christ! Yeah, but you have to drink a small glass of hot dog water when you get that hot dog. So yeah,
the salesperson who does the least in a week has to drink
the hot dog water. Yeah, exactly.
Yeah, Jim Pattison approach.
Jim Pattison all the way. Fuck, guy's old and he's still so fucking cheap.
Yeah. No.
Anyway,
but yes, volume.
It's just about it's a business model, but. That's when everybody tells you rate's not important. Then the next thing they tell you is the same lie as the bank. They tell you, that rate, you can't break that rate. That's a trap. That rate is a trap. Don't do it. That's also a complete lie. They use, and brokers also tell the weirdest lies because, again, small broker, let's even say a medium successful broker. Like a successful broker, in theory, a successful broker is any broker who does more than 15 million in a year. Okay, you might have done 15 million last week.
I did that.
Okay, yeah,
in 4 days last week.
There we go. So look, this is really important to understand. They want to use their pet lender. They want to use some lender who the their sales rep from the lenders taking them to lunch.
Yeah. They can squeeze every penny out.
Brought them a bottle at Christmas. And they could phone that person and whine about some underwriting issue. I'm so sad I didn't get the deal I wanted. Can't you push the underwriter to do this for me? And that guy, who's the guy or gal, the salesperson, who's the bottle giving, lunch buying, let's go bowling for the team kind of bullshit, that's their pet lender, and they want to send all the business to that lender. So then the new weird lie I get on the mortgage brokers is, no, you never want to use a bank. What the fuck? Never want to use a bank? You out of your mind? If you're a conventional mortgage or refinance, your bank is your best rate, for fuck's sakes. If you want a rental, bank is your best rate. What are you fucking talking about? Don't use a bank.
Yeah.
Because the bank's not buying you lunch. Bankers have bought me lunch. I shouldn't say that. I was bought one of the best dinners of my life in Montreal by a banker, but that's fine.
I believe it.
So the bottom line is this. What the mortgage broker is scared of, why they don't want you to go to a bank, is banks are good at retention. Banks are good at holding on to you. Yeah. Because the mortgage broker wants client for life, which is fine, but they want you to be a endless source of renewal income or an endless source of, hey, do you need a HELOC? Like, brokers actually phone people, in some cases every 6 months or 3 months, and say, hey, do you want to renovate? They're just trying to dream up ways for you to get a bigger mortgage all the time.
I wish I had enough time to do that.
Sure. But here's my point. But by the way, I'm sort of philosophically opposed to that. One of my beliefs is I'm not religious at all, but I think the 11th commandment should have been, thou shalt not tempt. Okay, hey, I think your equity's up. I think you could renovate your basement. Do you want to go on a trip to Cuba? Like, seriously, I mean, fuck off with that shit.
If people come to you, it's different. If people come to you and say, I'm in debt, or I need to refinance, or I want to do this, sure. Okay, let's talk about it. Math's either going to work or it's not.
But the bottom line is this. They want to keep sending business to their pet lender for the steaks in the bottle at Christmas, or the Christmas party, or the team bowling thing. And they don't like banks because a bank can do a lot, right? Like some lenders can't just give you a line of credit. They can't, they can't service all your needs. Like you can't get a checking account with some lenders. They don't even have any. Okay, they might be the best lender for you, the lowest rate. But still, a bank can sort of wrap their arms around you, and they can do things like
credit cards, lines of credit.
How about offering a renewal 6 months in advance? Yeah, right, stuff like that. So they've got so much. So the mortgage broker thinks, if I let this client go to a bank, they're going to wrap their arms around him and never going to see him again.
I mean, monolines make sense on some purchases and transfers, right? And so it's not always the case to say, well, maybe bank's not the best choice here, because it's not always. No, hold on. But to blanket say you never want to go to a bank, or to encourage people to not go there if it's the clearly the best option.
Because look,
because you're going to get more money. Yeah, fuck off.
To paraphrase the late great Charlie Munger, show me incentives and I'll show you why people recommend things. Show me what they're getting paid. I'll show you why they're recommending it. Yeah, I can tell you that now. Okay, and that's the problem. If you think that keep them away from banks who have the best rate, the best options, the best everything. And we do tons of business with banks, like millions and billions, whatever. And
500, 600 billion.
Whatever the fuck it is. Yeah, but because that's the best deal for the client.
That's what we do.
It's that simple. Okay, the best rate.
We buy it down to full.
Buy it down.
Every time.
Give you the best rate, give you the best options, and most of the time for refinance or for sales, some purchases.
We'll also tell you why. I'll tell you why. Hey, you know what? 2 weeks ago, I was recommending that bank. You're right, but now a different bank has a better rate.
Exactly.
Absolutely.
So if we talk about it really simplistically, inducements can drive brokers to want to use a particular lender that is not to the benefit of the client. That's just that simple. Okay, so because when I heard the one guy, because I had to talk, I sometimes I talk to clients. I don't talk like I talk to like one client versus his 30 clients. Yeah, but I talked to a client. He kept saying to me, "Are you sure I should go to a bank? Because I've used a broker before, and they've said this and they've said that." And I'm thinking, what the fuck?
People get so confused when they call, and I say, this is what you should do, and you shouldn't use us. You're already on the right track. Keep doing what you're doing. Like, you don't want my money? You don't want to work with me? It's like, no.
We'd love to work with you, but right now, for your situation, when your wife was working, now she's not working, you need to take the renewal. That's with your bank. That's it.
Yeah.
You don't qualify to move, okay? So we just relentlessly tell people the truth. That's my bank and broker lie segment for the day. And we come to our favorite part of the program.
What the actual fuck, Ron?
Yeah, like what the actual fuck is going on with these party leaders for the federal government, for the election that's coming, who keep talking about building jillion homes a year, okay? Like seriously, for all those people all those leaders who are saying they're going to build a jillion homes, build 500,000 homes a year, build 3 million homes by... Okay, you've been saying that for fucking ever. We're not even going to come fucking close. It's a preposterous lie. Oh no, Ron, modular homes. Fuck you on the modular homes. That's fucking ridiculous. We don't even have the capacity to build them. Oh, Ron, you're so negative. We can build the capacity. No, we can't. Shut the fuck up. So I want to say to all those leaders who are offering this is what I propose for you. I propose that we strip all your clothes off.
Oh no.
And that we lube up your head. Like we're going to take the top of the head and we're going to put all kinds of water-based lube on the top of your head, okay?
Jesus Christ.
And then we're going to bend you over and shove your head up your ass, okay? It's gross. I know. It's really gross, but you deserve it because it's such a ridiculous, sick lie to say.
All four of them or just three?
Don't make it worse. It was bad. Don't make it any worse, okay? So... it's such a preposterous lie. It's such a sick lie. There's never going to be 500,000. Oh, you'll see, Ron. No, I won't. I will not see. It will not happen. I put up a bet, by the way. I put on TikTok. I put up a bet.
10 grand.
No, 100 grand.
Okay.
Me and Mark Carney, and now Jugmeat Singh's in there, but I don't think Jugmeat.
In a boxing ring.
No boxing. I don't think Jugmeat could afford it. Maybe he could. Maybe he could be doing great.
Probably with those.
But anyway, we know Mark Carney is rich as fuck. Okay, so I put him up 100 grand with Mark. Mark and I. He's got if he gets elected, bet's off if he's not elected, but if he gets elected for the whole 4 years, if in any one of those years, even the last year, we hit 500,000 actual homes, Mark, tents don't count. No tents. Okay, no tents.
No cardboard boxes.
No cardboard boxes. But actual, real dwelling units. If we hit that, I'll pay you 100 grand. But if we don't hit it, no excuses, you gray-templed fucker. Okay, like you guy with little. I got gray too, but Mark is distinguished. Mark Carney's distinguished looking. But look, you distinguished looking fucker. You pay me 100 grand. Don't make excuses. Don't say, well, this happened, that happened, this happened. Don't do that. Don't. Just you said it, live it. If you fail anywhere between first year and fourth year, if you never get there, if you never get to this 500,000 homes in a year, no tents. Pay me my 100. Take the bet. Take the bet, Mark.
I'd love that. I'd love to see that.
Take the fucking bet, Mark. Take it. Okay. All right, folks, we're out. See you next week.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.